Gold miners look like they're about to melt down on this episode of Sunday Night Charts. We're going to start out with gold, get into the miners, head over to silver, and then we're going to get into the dollar and financial and energy stocks. Let's start out with the relative strength indicator on the 1-year chart, or RSI, and you can see when GLD's relative strength indicator heads down, as it did in June, and then in November, well, it said the price is also headed down, and look where it's headed now. It is not oversold at all. That means more downward pressure from the RSI on gold. How about the MACD, or moving average crossover? And you can see it crossed over right here, suggesting that prices are headed down. And when it crosses over, as you'll notice up here, crossover up here, crossover here, that likely has more down to go. And this could be the beginning of a downward trend moving into oversold conditions. So hopefully, if you're trading gold, you got your stop losses on. And let's take a look at Momentum Timer Pro. It kicked in and sold 2 sell signals on the daily, validating and backing up the RSI and MACD signals as another point in your trading arsenal. Check out MTP's free right now. There's a link above or in the description below. You can get in free, and when it goes paid as an early subscriber, you're going to get a monster discount. Let's take a look at the longer term momentum signals. We have price on the 21 and 100-day moving average remain bullish for now. 50 days gone bearish across the board with price and momentum, and it's dropped below all the key moving averages. This is a huge red flag, but it is not broken its 1, 3, 6, or 9 month momentum levels. And this is what a lot of momentum algorithms trade. If these start to break, then look for more selling pressure. But let's head over to the charts and see what we've got here with GLD hitting its 6-month volume profile line and finding support. Remember, it wasn't long ago everyone said, hey, this is a breakout. If you're on social media or FidTwit, I mean, people were excited. They said, this is it. It's finally the one that breaks out, and just boom, 3 days in a row, right down into the 6 and 1 month volume profile. How about 2-year right there, right on it? Suggesting that, again, this is Imagine Online. Everything above gets sold, everything below gets bought. And right now, sellers are in charge. They've got to break through this level of support to drive prices lower. And buyers are hoping there's enough of them that are not going to capitulate here. But if you look, you're seeing a series of lower highs along the way. And that is not what you want. Now, what the buyers want is to flush these sellers out. They thought they had it, didn't get it. Potential risks to the downside here in gold, but not a definitive call. We can see the technical indicators suggesting more downside to come, so the buyers need to hang on tight. Let's move over to gold miners. In this picture for gold miners, well, it's pretty ugly. Let's start out with the relative strength indicator. It is headed down, and that brings price down. It is not oversold yet. You want to see it get down around 30 to be oversold. And you'll note here, you can see in December, it hit an oversold condition, but price still went down. And you have to remember, one of the reasons RSI is not the best timing mechanism, because prices can stay overbought, as you can see here, from between October and November, and oversold much longer than expected. So it's not a timing indicator, but it just gives you a sense of, hey, there's an inflection point coming. You look back here in late September, RSI went oversold and price went up. So from an RSI perspective, more downward move coming for gold miners. And how about when we take a look here at the MACD, you see it crossed over just like gold did just recently, telling you there's a lot more downside move to come, because it tends to cross over. Well, you can see even at weaker levels, it tends to see price go down. And we mentioned before that this rally here was built on very weak momentum, and the MACD is confirming that. How about Momentum Timer Pro? It's got 2 sell signals on the last 2 days, and then on the 10-day signal, you can see here it had some earlier sell signals, again confirming what you're seeing here is weakness in the gold miners. But how bad is it going to be? Well, it could be really bad. Let's take a look at the longer term momentum signals. Price on all the moving averages is bearish, but all the key moving averages, all the momentum screens, the 1 through 12 months. And this is bad because, again, these momentum algorithms, when they see trends break, they start to sell. So let's take a look at the charts, because, well, my friends, it is not pretty at all. Let's go over here to GDX. Let's go back to the 6-month chart, and price got up there, and I remember we talked about that this was a level of resistance, and it tagged it, got rejected, price come down. Now let's go to the 1-year chart. What do we see? the same level as the 6-month. Price got up there and jammed into it, rejected. So sellers clearly defending it without much trouble. I mean, not much trouble at all. But now you start to look at the 2-year chart and you see just how dangerous things are playing out. Not only do you have a series of lower highs, but look right here in the short term, you can see a potential breakdown because price is hovering right at the last buying point was in late September. And if we zoom out just a little bit further on the 5-year chart, and let's trim this in a little bit to make it easier, what happens when it gets below this 2832 level is, well, that's where your last line of support is at. And then you're down here into a little bit of volume in the high 20 or mid 27s. And after that, there's not much left. What gold miners are telling us is the markets are running out of liquidity and about to plummet. Let's zoom in on the 10-day window here, and you can see sellers over the last 10 days, that is absolutely bearish. How about the 30-day window? Bearish. Sellers coming in above. How about 90 days? You guessed it, it's above. There is downward pressure and downward price coming from the gold miners, and that is bad news for the broad equity market in general. Again, it's a warning sign. The liquidity is drying up. And let's head over to the silver mine. Well, not silver mine, the silver trust, iShares Silver Trust. And we see the same story here. Relative strength indicator headed down, a leading indicator the price is going down. It is not oversold yet, so no bottom here to see. But how about the MACD? It just crossed over again, another warning sign that perhaps lower silver prices are coming. And let's take a look at Momentum Timer Pro. Yeah, it did on Friday, nabbed a sell signal for you. So again, Momentum Timer Pro, great shortcut if you don't have time to go through all the charts every day. It's got a ton of ETFs for you to look at, and it is free at the moment. So how about we take a look at momentum on the longer term? It is breaking down and turning bearish. The only good news for silver is, whoops, I forgot to recolor these. It should be red below the 21 and 9-day moving average. How about that? Forgot to do that. 3-month momentum is negative and rising, trying to fight back on these trends. And same with 6-month momentum. So there are buyers here. The question is, are they strong enough? Let's take a look at silver and see what we've got going on the silver charts. We'll use the futures like a little bit better. There's not really going to be not much difference between that and the ETF. And again, like gold came down, boom, 6-month volume profile. And hell, how about the 1 year? Hit the there's a 1 year is way up here. So let's zoom out on this chart because it's interesting. Remember, people were looking at this chart saying, hey, there's your double bottom, and it double bottomed right, what did I say, right into the volume profile line, smashed into it, got up to the 200-day moving average, which has been trending and following down, has broken down through all the other key moving averages. You look at silver, and if this thing breaks below, say, 2186, and now you're headed down. Again, we've been talking about how silver has got a destination with the mid-17s at this point, and this is not a pretty chart here for silver. The bulls just cannot get it done. They are more likely to see price come down to support here, and they've got to defend it. Otherwise, you got 1, 2, 3 points where people have bought in and are going to be losing on these trends. And they'll capitulate and turn into sellers and drive silver down even more. So bad news for silver as well as the gold miners. Let's go on to the dollar, which is perhaps the wrecking ball in this situation. RSI didn't quite get oversold, but got down here below 40. And that has signaled in the past a point where the dollar is starting to bottom. So you notice it's down here in April and May. The RSI was low. It didn't tell you to buy. It just said, look at your other indicators because they're going to signal one. How about your MACD? You look back April, May, RSI was saying, hey, you're kind of an oversold condition. The MACD didn't tell you to get in until late May, and then you ride that trend up. How about now? The MACD is going from a nice low position. It has crossed over and heading higher, suggesting that higher dollars is coming, and that will tighten financial conditions, bring bonds up with them, and perhaps send gold miners and silver down. Let's take a look at Momentum Timer Pro, consistent with what we're seeing in these other indicators. 4 days of buys on the daily. So if you're using Momentum Timer Pro as a validation tool or as a filtering tool, like I like to use it as, it goes through and tells you your other indicators to look at and validate before you get into the market. How about the longer term indicators? We see all the moving averages averages. Price and momentum are bullish above all the key moving averages. All the momentum screens are positive. And what that tells you is that if there are momentum algorithms that are not holding bigger dollar positions or do trade the dollar, they are going to be adding to their dollar positions, and that will drive prices even higher. So let's take a look at UUP, where we've got this beautiful volume profile line over the last 6 months. And remember, this is where the sellers were dominant here, and it broke through. Now look at the 1 year volume profile right there. So a lot of shares trading hands, a lot of people buying dollars there, telling you this is support. And look at what happened. The 2 year dollar mark got moved up. It was down here below, and now it's moving up. Look at beautiful bottom, validated by Momentum Timer Pro, MACD, RSI. It is gorgeous. Where does this thing go from here? Well, at this point, we should see, and let's get our drawing tool out, because it's always fun to do, even more fun to do it live. And so we just broke through this level right here. We're going to put a line there so you can see the little gap up. And so the most likely destination next is probably going to be right up here at 2634. And you'll notice kind of the reason I like that area on this is you see the volume in here, it kind of thins out. You should see that is the last point where people came in and sold. And so if that is where I would expect to see the dollar move, and they just changed the dollar charts on this, but that would tell me that we're looking at a move up potentially. I mean, in the short term, yep, we're going to get up to 99. That is really going to tighten financial conditions up a lot. All right, let's head over to the energy sector, currently in an oversold condition. Now you look at October on the RSI, it was oversold. Prices, still stayed up. It went oversold. Prices went up more. Still oversold. I mean, overbought. Let's get the terminology right here. It is overbought. Now, does that mean you should go short here, anything like that? Look, whether you go short or long is up to you. But if you're looking for an opposite trade, if you prefer to be long, take a look at treasuries. They tend to trade better and more inversely to the energy sector. If you're short trader, well, you're looking for a crossover on the MACD. Hasn't happened. You can see it's getting close, and you see the last time it did that presented not a huge move, but a nice move there. You can see prior moves. If you like a little bit of downside play, it's done that. How about Momentum Timer Pro on a bad screen capture is still all buy signals over the last 10 days, so thinking that should switch over pretty soon. Let's take a look at the longer term momentum signals. Everything almost is green. You got the 50-day and 100-day are showing a little bearish on momentum, saying things are slowing down. And it would make sense. What did the RSI tell you? It's oversold. What is the MACD? It looks like it's going to cross. MTP probably soon to follow suit with those as they move down. Let's take a look at XLE. And what do we see? Ooh, interesting, right at the 5-year volume profile line. So this thing shot up there, and what is it telling you? The prices are likely not going to breach there. You see a lot of people have sold that position before, so there you go. So what you're seeing in the technical indicators is now being validated by the volume price data. All right, let's go on to the financials. Oh, I guess I missed that. And with that, well, I thought I had the financials in here, but maybe we'll save that for next week. Anyways, I'm Steve Van Metre. Thanks for watching. Bye now. The content of this video provides educational information only. Is not intended to provide investment or other advice. Serial is not to be construed as recognition or solicitation by a security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre. Personal capacity opinions expressed in this video that do not affect the value of advising or Steven Van Metre Financial.